4% of 4% of American VCs are black. Income and wealth inequality by race has changed little in the last half century in the United States. What's the relationship and who has to do something about it? Today on Off the Sidelines. Hey, this is Off the Sidelines, an investor education podcast and interview series from Technically with support from Project Entrepreneur, a program underwritten by UBS. I'm joined by Todd, Khozein, Brian Brackeen. Hey, gentlemen.
Thanks for having me.
Hey, Chris.
Yeah, and you guys have real perspectives on this issue that at the end of the day, we want to ask today, white investors, how can you be part of the solution? Brian, you are an entrepreneur turned VC. Todd, you lead a company that does incredible economic development work, and you yourself do some investing. In fact, we'll find are involved in Brian's fund. So that's the lens we want to take. And I want to start with that concept of, who the heck you guys are and why your work matters, or is, I should say, relevant to this topic. So, Brian, you've had a heck of a 2020. So actually, I want to start with you. I've reported on you in the past as an entrepreneur. Why would you go to the dank, dirty waters of VC, and how'd you get there?
Because I love Patagonia sweaters. That's why. Brian Brackeen, general partner, Lightship Capital. We're a venture fund that focuses on women and minorities in the Midwest and the South. We're a $50 million fund. And why? Why do that? We'll learn during the podcast, but the problem is so great. The opportunity is so great. And just like when I was one of the few Black entrepreneurs doing facial recognition, and I saw a problem with bias, I'm also one of the few African Americans that have raised capital from outside investors. And I see a problem there, and I want to jump into that problem as well.
And Todd, just by way of introduction, I know your work as co-CEO of SecondMuse, an organization that does pretty incredible global kind of economic work, but you also do some investing, and you're involved in Brian's fund. Just so by way of introduction, did I lie at all there?
No, not at all. Yeah, we also have a capital arm, SecondMuse Capital, and yes, we are very involved in Brian's fund, and incredibly excited about our involvement.
So yeah, SecondMuse Capital is what is you guys are an LP in the fund, is that right?
Yeah, that's right. We're an LP and a minority co-GP.
Got it. Okay, understood. All right. So Brian, let's start with a bit of a case study. So Lightship Capital, a year and a half ago, I probably interviewed you, and this wasn't a thing. It is a thing now. Maybe give us a bit of a journey. And I don't know if you know this, but I think you're a black man, and there ain't a ton of black men in VC. 4% of VCs are black. Sounds like that's something we should learn something about. So could you give me a brief journey about how you got there, and some might say a super quick time, or I guess in other ways it might have taken a career to get there. Give me the brief window of how Lightship Capital came to be.
Yeah, all success is a lifetime in the making, right?
Yeah.
And so I think my previous experience as an entrepreneur, also my experience as a consultant at IBM, plays a huge role in how I see the world, how I see all these businesses that we invest in. But as I come to this moment, it's just painfully clear that the opportunity is huge, and it also has a kind of social impact, even though we're not a social impact fund, right? And so a couple things. We think about geography. The Midwest has the lowest cost to build a business to exit, and has the highest exit values, right? So what that means is, for every dollar you put into the Midwest as an investment, you get $5.17 back. And so it's just a fertile place for startups. And then you take all these diamonds in the roughs. You talked about the amount of venture capitalists, 4% that are black. The people that actually get venture capital, like black women, for instance, get 0.2% of all venture capital goes to a black woman. Meanwhile, that group is one of the most highly educated groups in the country, right? So there's this huge gap, which means it's like, as an investor, it's like you're fishing in a fully stocked pond all by yourself every day, Right. While all the other investors are focused on the San Francisco, they'll find the one or two diamonds in the rough, and they're all standing shoulder to shoulder, 500 people trying to catch one fish. And I'm looking at them like, are you not seeing this? And so this is really the opportunity we have here, Lightship Capital.
And Todd, maybe turn to you. I haven't done a lot of reporting on the SecondMuse Capital arm. Are you guys mostly LPs and other funds? Do you do direct investments? Why was the Lightship Capital fund something you guys wanted to put money in?
Yeah, I mean, as you know, SecondMuse has been doing work to try to build, inclusive and sustainable economies for well over a decade. And in the process, I mean, we talk about economies of the future. We talk about building the healthiest economies. And what we've seen in our work, which is reinforced, by a pretty abundant source of research, is that those economies that perform best, and in particular, especially during the nuttiness that we're seeing around us with global pandemics or with some of the wildfires, for example, is that you're seeing that one of the really big needs of economies is to be resilient, especially bouncing back from a hit. And one of the things that we have seen more and more of is that inclusive economies fundamentally are just better functioning economies. We've seen this through our work. In general, I mean, again, there's a lot of really good research that talks about diverse boards make more money for the company. Diverse teams are more creative or more innovative. I mean, at the end of the day, innovation, in a sense, is the intersection of ideas and ways of thinking that previously might not have crossed. And this holds true at the larger level as well, which is you're talking about economy. And so the tragedy that Brian talked about, when you talk about, for example, the lack of investments in Black women that he was referencing, it's tragic from an innovation standpoint. It's not just tragic for the women that are not getting funded. It's we're leaving incredible ideas sort of on the table. And so as we have, from SecondMuse, we really started from a very global perspective. We moved to New York about 6 years ago, looking at advanced manufacturing economy. And this was as we started to do work over there, we saw that over the course of a matter of years, you could change the culture and composition of an economy to be much more reflective of the diverse demographics that underlie that economy. And we've started to do work in the Midwest as well. And so there's this demographic thesis and this geographic thesis that we were starting to develop. And then we met Brian and Candace, and so we were true believers of the investment thesis, which was this. And so we have a number of financial sort of mechanisms that we both manage and make direct investments of as well.
I want to turn to Brian a moment to dig a bit here, and also I want to make sure we shout out Candace, who's partner in many ways with Brian on this fund. But one clarification with Utah that I think is probably important is I hear almost two layers to why SecondMuse Capital might be interested in a fund like Lightship. I hear both, like, which Brian alluded to, pure economics. Hey, there's a giant market opportunity. This is a way to make money, which is, whether we like it or not, a fundamental core of our capitalist system, and that's in part what is supposed to happen. But I also hear a degree of a moral imperative, and I suspect people might respond differently to those two different ingredients. I wonder if you can talk a bit more about that. There's this makes financial sense, and this is a moral imperative, and it sounds like both are there, but I want to make sure I'm not leaping.
Yeah, 100%. I think that's absolutely right. Anytime you're taking a look at a kind of complex issue, it's multifaceted, right? Several things can be true simultaneously. And I think that when you think about, is it bad to systematically oppress entire groups of the human family? Yeah, hell yes. I mean, that just feels wrong, right? I mean, that
should be an easy sentence to say. Yeah.
Right? Like, why do you want to keep people down? Like, because of their gender, because of the way they look, because of things that are like irrelevant from a human standpoint, so yeah, I think that's true. But I think that simultaneously there's this other truth, which is that, oppression is really expensive. I mean, like, building economies that are exclusive, building economies that are bad for the environment are just expensive. I mean, think about, Citibank just released this study where they build the cost of racism in the last 2 decades as $16 trillion. That is incredibly expensive. I'm in Portland, Oregon at the moment, and we were choking on wildfires the last month. Choking on the last 4 fires that are currently burning. Are going to each cost $1 billion. I mean, when you build an economy, would you build a family on the backs of your children? Would you literally poison the well out of which you're drinking? You wouldn't, because it's not an intelligent thing to do. So I think that 2 things are simultaneous, right? One is that, like, is it good to keep people down from living their true potential? 100% not. But by keeping people down, we're not just affecting the people whose potential we're keeping down. We're keeping all of us as a society down, because all of their ideas that were wanted to be in the world and never were are never going to rise. They're brilliant innovations. I mean, there's a hey, yeah, that's wrong thing, but it's also doesn't make financial sense.
Mm.
You can't believe in math and oppression. I'll put it that way.
I like that. Can't believe in math and oppression. Brian, how much, when you were raising this fund, did you use both cases? This is a moral imperative. This is just good market opportunity. Were they both tools? Was one used more or less?
We lead with the market opportunity, certainly, because we're a fund and we're trying to create market rate returns, and that's the headline on the building, so to speak. But then how you get there really matters, right? I could build a fund full of oil and gas extraction, right, and do really well, but not everyone wants to put their dollars there, right? I could make a lot of money diamond mining in Africa, right? But not everybody wants to put their dollars there. And so after you figure out how much you want to make and what's the requirement, how you get there matters. And we believe that we have a vessel that gets people there in a positive way.
Mm. So that's the sense here, is that Lightship Capital seems like a heck of an interesting case study. But the goal for our conversation here is to push a bit wider still and speak to a much, the 80+% of VC who identify or present as white, and what the heck they have to do to change the system they're part of. So I'd love to hear both of you talk a bit about, I've sure done a lot of reporting on a lot of well-intentioned white investors who would testify honestly and earnestly that they have nothing to do with systems of oppression, with racial inequality, that they believe in the meritocracy of the systems they support. I think we're having a reckoning with that concept. So could we at least name it? Like, when and how do we mean and believe that white investors contribute to the system of racial inequality that we are still very much living in?
I mean,
it's an easy question.
I mean, here. Let me speak as somebody. Who came from, who fled his country because of religious oppression. Am an immigrant twice over. Grew up in Latin America, and came over there, and I said, "Wow, I had it good."
Mm-hmm.
I mean, when you think about systems that were designed intentionally for centuries to keep a group of humans down because they could be identified by the naked eye. You're not talking about using bad words. You're talking about an incredibly intricate and complex way of seeing the world that involves culture, it involves music, it involves narratives, it involves stories that you grew up with. And so we're influenced and affected in ways that we don't know. I mean, just look at marketing. Marketing affects you in ways that you don't even know you're being influenced and affected. And so there's this thing about, when a system has been so designed to make you think a particular way, the second you step into that system, you're almost certainly being influenced in ways that you may not have any idea. Now, this is different than intentionality, right? You may have all the good intentions in the world, and if you say, "Hey, I'm not that person," what you're saying is that I'm not trying to be that person. But when you're in a system that's so steeped to prejudice you to think one way or another, I mean, think about materialism. We think about success and progress so interconnected with material progress that we have a hard time seeing success decoupled from material success. We have a system that has been so influenced by men and masculinity that we have a hard time decoupling successful behavior from masculine behavior. So you got to ask yourself the question. You got to just dig deeper, right? You got to just be like, how am I contributing to something, even if it's inadvertent? Ask yourself some uncomfortable questions. If I'm right, there's an assumption that if you're higher up on the hierarchy in the side of a company, that your voice is more valuable. This is a broad assumption that most of us share. Me as the CEO of a company, if I'm in the same room with an intern, and if I can't just expect the intern to bring their voice to the table unless I actually open the space to bring that intern's voice to the table. Because there's a current power dynamic that makes a certain assumption about me and makes a certain amount. So by me saying I'm not going to go out of my way to help bring this voice to the table that previously was not there, I'm reinforcing a power dynamic that was currently there.
Yeah, I just want to double click on that a little bit. I'm going to give you a real example of how these institutional problems persist, right? One of the standards in venture capital is that general partners like me and my wife invest in the funds that they are leading. It's often called skin in the game, right? You should have, and usually you're wealthy, you might put hundreds of thousands of dollars or sometimes even millions of dollars into the same fund alongside with the investors, because the idea is that it aligns all of the different groups financially. This makes perfect sense theoretically, but the reality is almost all venture managers that are Black or brown are first-time fund managers, right? And so they haven't had a chance to create a large amount of wealth in their lives as others. And so by saying, I only invest if people put in, hundreds of thousands of dollars alongside mine, or else I'm not investing, that just eliminates an entire group. That is systematic in itself. Now, Candace and I, to be completely just rawly honest with you here, we've invested about $400,000 so far into the fund. But we intentionally, the docs don't require that at all. And what we say to each of our investors is that we don't require it intentionally, because we want you guys to get used to the idea that Black fund managers shouldn't have to adhere to that requirement for the first time. And then in the second fund, you should require it, right? Just to get more people into venture. We're going to do it ourselves, but start to think differently about this for the next person.
That's quite compelling. I want to maybe pull out, because I know we only have you guys for so much time. There's a couple we want to dig into the meat of this conversation, but what I hear there is, I guess, two big categories of what do we really mean when we say white investors are contributing to racial inequalities. One is the maintenance of tradition. That's the way it's been done, without some of asking the hard questions, as Todd put it, like just assessing, well, why do we do it? Do we need this rule now? Is it causing a cycle to continue that we don't want or intend to? And the other big category that I think so often about, or have come across so often, is pure network effect. Just the rather than the evil mustachioed evildoer in your fund that is saying, I want to keep down Black and brown people, there is this really messy system of, well, we have had success with those white founders, with those companies that sound and look the same. And this next batch of white founders who look and sound the same, look like that. Our business is pattern recognition. We should follow that pattern. A lot of it, you could say, as you started saying, Brian, in a theoretical sense, if you pulled out a lot of issues, you could say, sure, I can follow that. But that is a network effect that then makes it makes it sure that that system will never allow other voices to come in. Is that fair? Like, those are the two ways I think about it. It's tradition and network are these big ways that white investors, even the most intentioned, are continuing this system on.
You prefaced this entire session on 2020, the world we're living in, right? I mean, the fires, right? Unrest in the streets. We have reached a point in America where we can no longer afford, all of us as a group, to do it the same way. The same way has led us to a literal breaking point. And so, and if you can make money as well, fixing that system. So again, we're not asking for any handouts here. We're not asking for donations. I'm trying to give you as much or more money back as in all your other investments. If you can do that and have less issues in the street, let's do that one.
Love it. All right, then let's solve some things here. We're going to solve some things right now. There's one last clarifying, and then we're going to do into like what are we really saying to investors. But I want to like linger for a moment here on a group that I come across a bunch, though I think we've dispelled some of it. But there is this, it ain't my job. You know, I've heard this a ton in doing interviewing off the record and otherwise. Like, hey, my job is to invest in fintech startups and get a return for my LPs. Anything beyond that, anything outside of that, I am deviating. I think it's great if philanthropy does it. I think it's great that there's some impact investing. Good job. That ain't me. And I've come across this a bunch. I wonder if you guys have come across that, and if you found any effective push, or if you did, how you try to rearticulate what does it mean to say ain't my job.
Yeah, I think that the thought is definitely, I've heard it. I have a few different responses to this is not my job. One is that, if you're so good at pattern recognition, are you recognizing the pattern of history? Because we're moving in a particular direction. Our systems that we have built have outlived any value they once possessed. I mean, when you build a house on a crooked foundation, at some point, you're going to get cracks in the wall, and at some point, it's going to have substantial problems for what you've built. And what we're seeing is not something. We're not seeing something that happened in 2020. We're seeing the effect of decisions that were made long ago and have continued to be reinforced. We just did this program with the Rockefeller Foundation, where we asked communities from around the world to give us a taste of what the future of food looks like. Food economies. 1,300 economies from around the world responded. Each of them public-private partnership of governments and academics, and this kind of. The only common thread that we could see across all of them is that the future is going to be dramatically different than the present. So I would say betting on the present, or worse, betting on your past, is a far riskier proposition than betting on the future that Brian is describing.
Also, I think inherent in this conversation is we almost come with the assumption that venture as is successful. Venture as an asset class is not a very good asset class.
Right.
So why are we doubling down?
And Brian, can we even pause it for a moment? I think that's one of my favorite data points from reporting that I think is endlessly lost. The high rates of return in venture is so categorized with a very small number of firms that have now cleverly gotten themselves to be able to see everything and command whatever they want. And a whole lot of the VC firms, like, man, you do better with get yourself a Vanguard index fund because you ain't doing nothing with your VC. That's sort of what you're alluding to. In addition to, like, forget even the moral imperative for a moment, though we ought not. You're even describing that. It's not. This isn't even that much a collectively successful financial instrument. Is, I think, sort of what you're saying.
That's exactly correct. I mean, it goes back to the talk about everyone fishing in the same pond. So everyone is in the same pond with, again, 5 fish. And next to you is Andreessen, right? These big firms, Sequoia. And these guys have boats with nets, and they're out there catching everything. And you're staying the side with a small rod. And then Lightship and a few others are fishing in a fully stocked pond. And you're committing yourself to the other way. If you don't work at Sequoia, if you don't work at Andreessen, your chances of getting one of those 5 fish is infinitesimally low.
Yep.
And so when you say it's not my job, what is your job is to create market rate return and to find great companies. And if you're fishing in an empty pond, you're not doing your job.
Well, all right. So I like that, Brian. So all right. So let's say we've managed to capture the intention of a class of white investors or just investors who otherwise have not put racial equity anywhere near their understanding of the world in which they operate. What do we have them do? What is the advice, demand, strategy? What should they be thinking about to do something about it? How do you go from white investors being the problem to contributing to a solution?
I mean, to Brian's point that you were talking to about before. I mean, venture capital loses money as an industry as a whole, right? So it is not a, and this is pretty well documented. One of the reasons you got to imagine why there is a dearth of investment in people of color or women is because it's a risky field. People de-risk by familiarity. And so if somebody comes from the same place that I do, or thinks the same way that I do, or talks the same way that I do, that makes me feel like I understand this individual better or this technology better, even though I really don't. And so, there's one clear thing is invest in Brian and Candace, right? Invest in Black fund managers. Invest in women fund managers. Invest in fund managers that are going to see the world different. Surround yourself and be influenced by people that think differently than you. I mean, that's how you de-risk your thinking, right? I mean, investment is a de-risking game, right? Try to make this. Try to see things. Try to see your blind spots and find your blind spots. We got all kinds of blind spots, and we're not going to be able to solve them on ourselves. The only way that we can de-risk our blind spots is with each other, where each other is people that are different than us. And I think that there's concrete things to do. What is the composition of your team? Where are you? Are you actively seeking pipeline that is more representative? Because to Brian's point, chances are that's going to improve the sheer quality of the innovation in your pipeline.
Brian, you think you got any advice for the white investor? And I think that can range, like Todd saying both, like if you're that can range from I do angel deals to I have been an LP in a fund in the past, or I'm an entrepreneur who thinks that investing as an asset class could be in my future. There's a range of different people. What are different steps that they can think about?
Yeah, I would say a couple of things. To let a little bit of pressure off my white investor brethren, there's a real issue around African American fund managers who are really hardcore about not investing in African Americans. There's a real problem with women investors that won't invest in women. So we have to kind of all think about the problem as well, and how we're gonna kind of manage to that. But I think co-investing is important. In our case, we're a early stage seed and Series A investor. Sometimes we've got to pass them off to someone who's going to see them a little further down the journey. I think that's certainly very important. I think that giving back, whether it be office hours and things, and not office hours in Palo Alto, right? Maybe some office hours in Oakland. Maybe take the trip, right? Or even crazier, office hours in Chicago or Detroit or Cincinnati or St. Louis. I know this is crazy talk, but you might just find some diversity because 90% of African Americans live east of the Mississippi. So don't think you're seeing all the Black deals in Palo Alto when there are like 3 residents of Palo Alto that are Black, right? You got to possibly check out South, check out the East Coast.
Sorry, can we build on that? There's something else to remember, right? We're living in a period of time where, I mean, we are sitting on the back of centuries of policies and narratives and stories that are designed to develop structures, some of which Brian was sort of breaking down a little earlier, that include some people and exclude other people. It's not going to happen overnight, right? I mean, some of this stuff is internal. Checking your internal narratives and asking yourself the deeper question. Some of it is making one step or one move, and as you make more steps, you're going to start to see, a world open up into you, in the way that you see the world, in the way that you think about in the world, and in the way that you're deploying capital.
Yeah, so much of what I hear you guys saying are ask yourselves the questions as a starting point. What does my portfolio look like and why? What does my team look like and why? Am I fishing, as Brian puts it, in a well-stocked or overfished pond? And gosh, man, I think it's important that I hear you guys acknowledging this is a question both of I mean, sheer morality. This is a social justice issue and a financial one. I think it's critical that you guys call out both of those points, that pick your lane. Which do you care more about? Morality or financial returns? Both of them seem to point in the direction of change. And we should be doing something about it.
I have to double down on that one
Please.
as well. We did some work with the foundation here in town, Cincinnati, very, very painful group. And they talked about how this is a foundation whose sole job is to improve the quality of lives of people in Cincinnati. And they were talking about how their donors are very focused on poverty work. They'll give money for blankets and they'll give money for food banks, and they're willing to invest in the outcomes of the systemic racism machine, but not willing to invest upstream, right? In investment in these communities, better jobs, building companies who also, when they exit, the whole team does well, right?
Right.
And they said, oh, it's really hard for our folks to do that. I can't tell you the number of folks that we've talked to who offered to give money to our efforts, but wouldn't invest from the fund, right? As if they don't believe in the very people they're trying to help. They don't believe in the people they care so much about can create market rate return, but we can give you a donation. It's insane.
And that, I think, at the end of the day, is both a cause and a symptom of centuries of misaligned, of oppressive acts that we're aiming to solve for. Brian, Todd, thank you for being part of this conversation. This was meant to be some takeaways for white investors. How the heck can you be part of the solution? As alluded to, though, this is something that all stakeholders will have to be part. I'm Chris Wink. I'm from Technically. You'll see the full audio podcast on all of your podcast platforms of choice. Just look for Off the Sidelines for the full episode. This has been the video edition. Todd, Brian, thanks so much for being a part. We'll catch you next time.
Thanks.